Hello, this is Jordan, and this is the weekly video market update for all Palisade Radio listeners. Today is Wednesday, September 24th, 2014. Monday evening, we sent out a brief note to our premium subscribers saying to be on alert for a rebound in the precious metal sector and to consider closing out your hedged positions, at least the volatile hedged positions against precious metals. And there are several reasons we were looking for a rebound. This is just one here. This is a picture of the Holbert Gold Newsletter Sentiment Index. He tracks gold-related newsletters and the ones that are more oriented towards trading and advising their subscribers on should you be long or short. And as I said, it tends to be short-term oriented. This indicator has gone very negative, almost to minus 50%, which means I think that for half of your precious metals trading portfolio, it means for 100% of your precious metals trading portfolio, it should be 50% short. But in any event, that isn't terribly important. What's more important is we can look at the red here, which is the indicator, and the blue, which is gold, and we can see that the indicator is at its second most oversold in a very, very long time. Obviously, the most oversold it was in probably a multi-year period was there in the summer of 2013, and gold hasn't really broken below that. So we're seeing very negative sentiment here in the short term. Other indications of that are the daily sentiment index. That's very volatile, but that I believe got as low as 5% for gold and something similar for silver. So when we see those types of things, and considering that the market has declined sharply in recent weeks and months, it's an indicator that the short-term trend could reverse itself. And another indication of that is silver has really been leading the move down as far as the last couple weeks and months. In the last 2 weeks or so, silver broke to a new bear market low. It broke below 18. Yet Monday, you can't quite see it on this chart because this is a bar chart. But if you look at a candle chart, you'll notice on Monday that silver formed a pretty strong reversal. And that's significant because if you look at the top, the RSI indicator was extremely oversold when silver formed that reversal. And we discussed the sentiment in the last slide. So when you put all these factors together, it's an indication that the market is probably going to have a rebound over the coming days and perhaps weeks. And a potential target for that could be the breakdown point there just below 19. So be on alert for a potential rally up to that level. Now looking at gold, gold didn't quite get as oversold as silver. It didn't break to a new low yet, but still this is a negative looking chart. As I said, the market did not come down to that support around 1180 to 1200. Gold could rally all the way back to the 1270s and the chart would still be bearish. So let's keep in mind that gold, like silver, is very oversold, probably more likely to have a rally here than not. But as I said, let's keep in mind that it could rally nicely here over the coming weeks, but still remain in a downtrend as far as the larger trend. And looking at the stocks, they really reversed sharply in the last week. Here we have GDXJ, the Huey Gold Bugs Index, GDX, and SIL, which is for silver stocks. And so this gives a picture of what the entire mining sector is doing. Obviously, there's many indexes out there. I mean, these are just ones that we put together, kind of looking at the big picture, the big miners, and then the larger juniors, which is GDXJ, and then SIL for silver stocks. The miners just in recent weeks really blew through their 200-day moving average. It didn't support the market for that long. And we've seen a sharp decline, as I said, in the past week. Yet in recent days, these indices have come close to their late May, early June lows, you could say. So when you note that support on all these charts, you can see that it is a level of support and it is important support. And given that these miners are very oversold, in other words, they've come down sharply to these levels without much of a bounce. They've reached these support levels in an oversold condition. Well, not just an oversold condition, but an extreme oversold condition. That is the point when you could see a reversal. So in the past day or two, that's why we're seeing, I don't want to say a rally because we haven't had big moves, but we're seeing an arrest to the recent decline. And so, who knows how long this rebound or rally is going to run, but in the best case scenario, it could potentially go as high as these 200-day moving average, which are going to be stiff resistance if the miners do rally that high. But I do want to note that I do expect that the December lows will be tested at some point. So we should view this in the context of a potential short-term rally, not the bottom. And that's all for today. You can visit my website at thedailygold.com. I have a free newsletter you can sign up for. Just put your email address in the box at the top right corner. If you have any questions about this video or any comments, you can email me, jordan@thedailygold.com. Thank you so much for watching, and we'll talk to you next week.